Well, thank you everyone for being here for this really exciting live event with Paulina Tenner. Paulina is an entrepreneur, a seed investor, an angel investor, a startup mentor, an author, a TEDx speaker, and the founder of Granttree, a firm designed to help tech startups navigate the very complex world of government funding. Today, Paulina is going to speak to us about how to attract investors' interest as a female founder. I'm Linda Fisk. I'm the CEO of LeadHERship Global, and I am absolutely thrilled to welcome you to the program today. LeadHERship Global is the most impactful community of extraordinary leaders in the world. We unleash the full potential of high-performing and growth-oriented leaders in a confidential, supportive, and private community. LeadHERship Global helps members accelerate their success by defining their vision, growing their leadership, expanding their influence, and leaving a lasting legacy. If you're interested in learning more about this remarkable community of women leading across business, entertainment, or politics, then please reach out. Now let's talk about our topic that we're going to dive into today. You know, raising finance for your startup can be challenging, especially if you're a female founder. So today we are going to learn precisely what it takes to be ready to pitch to investors, how to attract their interest, make your pitch compelling, and that's whether you're pursuing angel investor funds or venture capital firms. So be sure to bring all of your fundraising questions to today's discussion. We will also discuss the different types of funding that are available and how to choose the right type of funding for your business and what it takes to begin investment conversations with either angel investors or venture capital firms. As I noted, Paulina Tenner is a powerhouse. She is an entrepreneur, a seed investor, an angel investor, a startup mentor, an author, a TEDx speaker, and the founder of Granttree. I will tell you that her story is nothing less than miraculous. Get this, since 2010, the Granttree team raised over 200 million pounds for more than 600 technology startups and scale-ups using solely government funding, which is remarkable. So I am so excited to be able to welcome Paulina to today's conversation. She is a unbelievable leader in that not only did she raise 200 million pounds for 600 technology startups and scale-ups, but she is also an advocate of an open culture company, which pioneered the self-set salary scheme, where every person sets their own salary, and an empowering culture governed by holacracy. So that's a remarkable, incredible sort of feat in and of itself. But I will not wait one more moment before we start diving into the conversation with Paulina. So Paulina, thank you so much for joining us.
Thank you, Linda. That was, wow, quite an introduction. I hope I'll be able to step into those shoes that you've kind of laid out for me there. Ladies, really chuffed that you joined us today. Very happy to kind of share with you a little bit of my experience and hopefully be helpful and practical in terms of helping you envision what type of funding might be relevant for your businesses, how to raise that funding, and how to really, because we are at a disadvantage. We are, you know, so-called underrepresented or underestimated founders as females when it comes to raising finance from angels and VCs. So we'll talk a bit about that today. So the plan is as follows. This is going to be quite an informal event. So I've got some notes here for myself in terms of the points that I want to cover. So, and I'm sure you've brought some questions with you. So what I was thinking to do is to go through what I've prepared. I think it'll take about 15 to 20 minutes, and then open the floor up to questions and answer anything and everything that you've kind of brought to this event today. So if you're ready, Linda, shall we get this going?
Yes, please.
Get this party started. Yes, fabulous. So a little bit about, you know, my experience and where I'm coming from as an investor and someone with expertise in the funding space. So as Linda mentioned already, I am a founder of a company called Granttree, which is now 11 years old. It's based in London. That's where I live. And Granttree has been started with a purpose to help startups and scale-ups in the technology space navigate the complex world of government funding. So we have, as Linda also mentioned, raised over 200 million since we started, 200 million sterling worth of government funding for startups. So we know quite a bit about fundraising in terms of equity-free funding. So the type of funding where you don't actually have to give somebody a stake in your company to receive funding, but it just comes without a price tag in this way. So that's one hat I'm wearing as a Granttree founder. I also, about 5 years ago, started investing as an angel investor. And what that means, as opposed to VCs or venture capital or venture finance, is that the individual in question is investing smaller amounts. So in my case, 10 to 20,000 pounds per startup. Sometimes it can be more, it can be 50,000. There are even angels that invest 100,000 sterling per startup, but they invest their own money. And because of that, they're typically a bit more approachable, a little bit friendlier, perhaps a bit more easygoing, generally speaking, than venture capital people who invest money that's not their own, money that's been invested in their fund. And therefore, there are some checks in place. They have to make sure that the company performs, that it scales, that it's a high growth company. And sorry, I'm gonna just switch off my sound here because my emails are coming in. Can you hear me now? Yeah, perfect. Okay. So I am about to actually step into this role. So I am in the process of setting up my own fund of the size of 20 million pounds. I have found an investor who wants to invest some money into my fund. And for the first time in my life, I will be investing somebody else's money, which is exciting, but also a hell of a lot of responsibility. So yeah, if you talk to me in a year's time, I'll have quite a lot more experience in terms of investing bigger amounts of money, this time 250 to 500K per startup into 4 vertical markets, again, in the technology space. But that's enough about me. Let's talk about the topic, which is raising finance as a female founder. So some statistics for you. The good news is that the number of female-founded startups is growing, which is fantastic. In the US, it's been from only 4% of all startups being female-founded in 2001 to over 21% in 2018. So that is good news. Now, the not so good news is that, and I've got some statistics for the UK, some statistics for the US. I appreciate that a lot of you're from probably everywhere, all sorts of locations and geographies globally. But hopefully those statistics will be relevant. So according to research from British Business Bank, of the 5.6 billion of venture capital raised in 2017 in the UK, 89% of it went to all male founding teams. So only 11% went to mixed teams where, let's say, one founder is male, one founder is female, or all female teams. And in the US, where 38% of companies are founded by women, female-led companies receive just 2% of venture funding. So that's quite shocking statistics. When you think about it, 40%, almost 40%, 38% of all companies are founded by women. Only 2% of all companies that receive venture capital funding are led by women. So very, very, very small proportion. So before I start talking about how to attract interest as a female founder from investors, I wanted to talk a little bit about the importance of understanding and envisioning what kind of business you actually want to run. So in my business, Grantry, which is now over 50 people strong, it's essentially consultancy-based business. I have never raised funding, and I don't really think that it's a kind of business that could attract investors' interest because of the types of high growth businesses that VCs tend to invest in. Consultancies are typically not particularly investable business models. So first of all, think about whether you want to run a business that will support yourself, perhaps your family, maybe a few members of staff, or do you actually have ambitions to create potentially the next unicorn, which is a business that's valued at $1 billion or pounds. So first of all, answer the question, do you actually definitely need funding? Is what you're trying to achieve, could it be achieved with client revenues? So getting clients early enough to finance the growth of your business. And if you think you will actually need to raise angel or VC funding, again, you need to be aware that venture capital funding represents kind of the most demanding type of fundraising strategy. So you need to be realistic whether that's, your business will actually appeal to VCs. So businesses typically funded by venture capitalists are high growth, highly scalable. They have an exit plan or an exit on the horizon, which could come in the form of acquisition or in the form of an IPO, so floating on the stock exchange. VCs generally invest in companies that are likely to deliver at least, they're likely to grow by a factor of 10 or even up to 50 in the next 5 years, and that are likely to achieve a valuation of at least a few $100 million. So both venture capitalists and angel investors are aware that most startups they invest in will fail, because that's what statistics say. So they're looking for that. What they're looking for in a business is that high scalability, high growth potential, a big market, big ambition of the founder, and also the capability to withstand the pressure that it takes to grow your business to such a level so quickly. So that's what you're kind of working with, that you need to be aware of, that stepping into this game, that is either angel investing, angel finance, or VC finance. And just to clarify, angel finance, it typically comes before you raise venture capital funding. So I'm talking to quite a lot of startups that are going through their so-called pre-seed and seed funding rounds, and those are typically raised from their friends and family network, from angel investors like myself, and later on, when it comes to their so-called Series A, which is typically at least a few million up to sometimes 10, 20 million, those amounts of money would be raised from VCs. And if you actually believe that you have what it takes to raise money from a VC and from an angel and then from a VC, definitely go for it. So many women don't believe, and also many founders that I met don't believe they have actually what it takes to get investors' interest, and that they don't have attractive enough propositions for investors. So if you have that high scalability in your business model and that ambition to create the next potential unicorn, you should absolutely go out and talk to investors and talk to them as early as possible before you need money. Because it's all about creating that relationship that you will be able to then take advantage of when the time actually comes to raise the funding. Cool. So how to raise funding as a woman? So actually, the fact that you are one of the fewer women as compared to men raising funding can act in your advantage. So I built my presence on the tech startup scene as someone, I took advantage of the fact that I stood out. So it's not necessarily a bad thing. You can be much more memorable in that way. And it's sometimes easier to relate to women, I find. So don't feel that you're at a huge disadvantage and it's definitely going to be very difficult for you. It can actually be an advantage to be kind of different in that way, and focus on your key strengths. So in general terms, and I highlight this in general terms because it doesn't have to be true, but women tend to be strong in people skills, building corporations, networking. So use those key strengths or whatever key strengths you have when going out to fundraise. Just to give you an example, I'm quite good at networking. So when Clubhouse first came out, I went on Clubhouse and I actually got invited by an angel investor from the US, from the Bay Area, to join her room, which I'm actually moderating in today. So that's why I have to finish on the hour. But in that room, investors give founders tips about how to prepare your pitch, how to fundraise effectively. So it's not a pitching room, but it's a room where investors interact with founders to help them refine their pitch. And I got invited into that room. And in that room, I met another moderator who who's about to become my so-called limited partner. So an investor in my fund, in my seed fund. So it really worked for me that I was quite strong in terms of networking and kind of befriending people. So really kind of focusing on the strengths that you have. Female founders tend to be solopreneurs more than men. So typically, not always, but typically single founder startups are not investable for angels or VCs. They like to see a team of 2 or 3 sometimes, because you will be able to support each other with kind of different skill sets. So if you are currently a solopreneur, consider building a team. If you're, for example, strong in sales, my co-founder, who's also my husband, is strong in operations in terms of building technical products, has experience in people management. So we really complement each other very well. So that's kind of one point to remember. Secondly, identify your female-led startup role models who can help you provide introductions to investors. So think about your network. Who do you have in your network? Do you have somebody who is, and your network is comprised of, workplaces that you've been part of in your career, random friendships that you've had. So it's, all of us, out of necessity, get to meet a wide variety of people. So really think about who is in your network that could help introduce you to an investor. And pitch to a diverse group of investors. So as statistics in the US this time, 29.5% of angel investors in the US and 11% of venture capitalists are women. So 30% of all angel investors are women. That's really great. And obviously, they are likely to appreciate and be wanting to help a female startup founder. Even if you don't raise investment from them, they're very likely to be able to at least have a conversation with you. I'm always on the lookout for interesting businesses started by women. And ask those investors for advice. So there's a saying that if you ask for money, you're likely to just get advice. Whereas if you ask somebody for advice, they might actually invest in your business. So other than kind of pitching straight away, get the investor interested in what it is that you're doing. Ask them for feedback. Ask them for some advice regarding your strategy, your business development, etc. And then chances are that they will become interested in you and what it is that you're doing, and will actually offer you some funding. So ask for advice. Be aware of favorable statistics, which actually state that for every dollar invested in male teams, produces 31 cents of revenue, whereas the same invested in female teams equals 78 cents. So women are actually really effective and efficient in terms of delivering return on investment. And statistics also say that startups with a mixed founding team perform on average 63% better than ones with all male founders. So statistics really go in your favor, and it's really important to be aware of them to boost your confidence, and also to, it's something that you can well mention that you pay great attention to diversity in your team while pitching. Use real data to help support your idea. So when pitching, use feedback from potential or existing customers about your product. That will really help strengthen and support your pitch. Define the market opportunity and market size. So as I mentioned, both angel investors and venture capital investors really care about there being a big market for what it is that you're building. And they want to be reassured that your business can scale quickly and reach a high proportion, a high percentage of that market. So that's important. Be bold and clear with investors when it comes to your ask. So in general, women tend to ask for less money as compared to male founders, statistics say. So be bold, be clear, lay out what it is that you need and how the funding is going to be used. So are you going to hire a team with this funding? Are you going to perhaps do research and development of your product? Or perhaps you're going to invest it into marketing, into it could be all sorts of things depending on what it is that you're doing in your business, but it could be buying premises, it could be setting up the infrastructure. So it's very important to be clear how the investors' money is going to be used. Demonstrate your expertise and confidence in your venture. Because you are at a disadvantage as underrepresented founder, you need to shine even brighter than all male founded startups. You need to really be in your power and confident when pitching. It's important that you really stand out. So you use the fact that you're a woman to help you shine brighter and to help you stand out. Be enthusiastic about your long-term vision and the way you want to influence or transform your industry. So investors really get enthused by and attracted to a big vision, so what we like to call a moonshot goal. So it's really important that you can explain what's the big idea. So what's your 5 to 10 year vision? How are you going to transform or change your industry? and what practical steps you're going to take in the next 6 months to a year to move you closer towards achieving that goal. And don't give up. Don't take rejection personally. Learn from every pitch and improve according to the feedback that you receive. So it's very likely that you will need to meet tens, if not sometimes hundreds of investors before you. So you'll have to kiss a lot of frogs before you find that prince. And it's super important that you build that resilience, that you don't get discouraged, that you treat every pitch as an opportunity to improve and get better. And before I wrap up, I'll say a few things about how best to approach investors. It's unfortunately still the case that introductions work best. So whereas it's definitely possible to approach investors cold, and I'll get to that in a second, introductions work best. So it's important that, as I said before, you scan the network of your family and friends, as well as previous and past and current colleagues and kind of work related networks, for people that might be able to introduce you to investors, or for people that might be able to actually, as high net worth individuals, to chip into your funding rounds. Investors are people, so it's really important to be able to, for you to be able to engage with them on a personal level. So use social media. I've used Clubhouse for that, as I mentioned, but a lot of investors I know are on Twitter, for example, and you can find investors on LinkedIn. And it's important to engage with them, not send them a pitch right away before they know anything about you, but to engage with them on a personal level, perhaps follow them, comment on something that they post on social media. Respond to a question they might pose, or something that they've posted, with some advice or some feedback. So engage with them on a personal level, and then later on suggest perhaps a meeting, or ask whether or not they might be able to give you some feedback again on your startup, and let that happen before you actually ask for money. When you approach investors cold, and it's something that I will, in my fund, which I'm launching in August, I'll be open to cold approaches, because I believe that that's kind of widens the pool for potential interesting startups, and it really kind of helps us reach the types of startups where founders don't have those very rich networks of high net worths, etc. In cold emails, it's very important to personalize them. So to be kind of concise about what it is that you are presenting and what it is that you're proposing, but to personalize them. So to say, I've seen that you invested in company XYZ, or that you invest in the industry of, for example, green technologies, which is going to be one of my vertical markets. And that you invested in a company that does, I don't know, for example, hydrogen-powered vehicles. And it's important to kind of grab investors' interest with a personalized intro. Then I would suggest that second best thing to being able to present your business opportunity face-to-face is to actually film your pitch. So there are tools that you can use to kind of create a short video of you talking about your startup, 1 or 2 minutes, but I think that's much more effective than just sending a pitch deck with nothing else. Then you can use things like tracking devices, with tracking kind of software platforms, which allow you to see how far in the pitch deck or in the proposition investor has read, and what they, which bits maybe they spent more time on. So that's actually a good thing to consider using. And also, when you get some interest from an investor, instead of drowning them in data or business plans or anything like that, ask them what it is that they would actually like to see from you next. What is it? Do they want to see your marketing strategy? Do they want to see your, I don't know, product development runway? Whatever it is, but make sure that you kind of engage with them and that you stay really relevant to their process. Okay, so that would be it in terms of how to approach investors, and I'm obviously very happy to answer questions about it. And to wrap up what I've had to say, just wanted to say that it's kind of looks promising. So when I look at the tech scene, there are not only more female founders these days, but we have role model success stories, such as the recent IPO of the dating app Bumble, which has been kind of great news for female founders all around the world. There is a company in the UK. There is a fund in the UK, Ada Ventures. I'm talking to the founder of this fund. She is focused primarily on female and underrepresented founders. And I know there are funds in the US. I don't know the names of them, but I've read about funds in the US, again, that are focused on female and underrepresented founders. So that's really promising. And I think there will be more of them as investors realize what an opportunity it actually is, given that female founded teams, underrepresented founders, founded teams, typically account for more return on investment. So I think the future looks good and looks bright. And I look forward to seeing more amazing female founders on
I
the
love
startup
this,
scene.
Paulina.
So that's
Thank
all
you so
in terms
much.
of what I wanted to say.
I think this has been really, really helpful. What I would invite everyone to do is add your questions to the chat. So as Paulina was talking, she offered a lot of tips and techniques. She offered a lot of advice and guidance. I'm sure all of you took copious notes. So as you have questions about anything that Paulina covered, please add them to the chat and we'll go through them. And in the meantime, Paulina, you said that's certainly a warm introduction to an angel investor or to a venture capitalist firm, private equity firm is always the best way to receive response. If they know you,
Yes.
if they're connected to you, if they are familiar with you and your business, it's obviously really a much warmer kind of intro. So 2 questions there. One, it seems then that every founder needs to make sure that their social media is up to date, their website is up to date, that they really are doing the very best job they can to communicate their unique value proposition, because as soon as they reach out to those founder or those investors will do their homework. They'll look them up on social, they'll check out their website. So it seems like even before you introduce yourself to an investor, you need to make sure that your house is in order. Your social media is clean, your website is up to date, you're showcasing your business and you're showcasing your thought leadership in the very best way. So that's number 1, just checking on that. 2, what if you don't have a wide network of family offices, angel investors, venture capitalist firms? What are some ways to begin to break the ice and find those investment firms that uniquely invest in your kind of business? Right? So doing a gunshot approach, as you said, is not very useful. It's important that every founder understand the kinds of businesses that a particular investor is likely to invest in. So how can you do that research and identify those investors that are aligned with the kind of business that you represent?
Sure. So there are quite a lot of tools and databases. The one I've used is called Angel List for angel investors. And there you can search by sector. So search only, for example, in a sector of, I don't know, retail technologies, for example. So identify those databases. The angel friend of mine from the Bay Area runs a club called angelclub.com, where she actually organizes pitching events, and she has extensive databases of investors as well. So again, good thing to angelclub.com, recommend looking it up. But there are definitely tools and databases out there to help you identify those kinds of investors that invest in your specific so-called vertical or sector. You can also do your own research. So identify companies in your space that have recently received funding and check who they received funding from. So that's a good thing to try. Also, when researching investors, all investors I know will have it spelled out loud and clear on their website what industries they invest in. So it's very important before you approach an investor, have a look on their website, check what, and they typically will have their so-called portfolio. So the companies that they've invested in on their website. So you can kind of look those companies up and see if they feel like you kind of, in a way, similar to your business. If there is a way you could compare yourself to a business that's already been invested in by that investor.
That helps a lot. Thank you, Paulina. And we do have now a couple questions in the chat.
From Linda,
Linda, what do VC investors usually look for as an exchange for their investment?
Good question, very good question. So, as I pointed out, VCs are really interested in high growth businesses that will be able to scale by a factor of 10 or even 50 in the next 5 to 10 years. So they will definitely put somebody on your board of advisors. So they will have some, a level of control over your company in terms of in terms of your strategy, in terms of how you want to grow your business. So when you have an investor, a venture capitalist on board, you are no longer completely free to do whatever you want with your business. You're on a certain trajectory, and it's about hitting that 10x. It's about high growth, quick growth as well. So investors look for those opportunities where they can make money on. So for example, I'm looking at a business right now that I will likely invest in once I launch my fund, and I'll probably put 500,000 in them in exchange for 10%, so an equity stake of 10% in the company. I would like for that 500K to be worth 5 million and more in the next few years. So that's what I'm looking for. I'm looking for so that I can obviously generate return on investment for the investor in my fund. So VCs are quite return on investment focused, quite money minded, and that's important to know. And they will have a degree of control over your business as well. So they will have a seat on your board, and it's someone that you'll end up being, to a degree, like some people say, wedded to or married to. So you'll need to make sure that you have a good working relationship with them. So they will look for opportunities, and they will also help you to scale your business rapidly and to scale your business by a, as I said, factor of 10, even 50%. So that's what investors are looking for, VCs.
That's super helpful, Paulina. Where would you find VC investors who are open to investing in social reform kinds of businesses? So social impact, social reform, those kinds of things.
Yeah, again, good question. So there are more and more impact investment funds out there that I am aware of, I have heard about. Again, I wouldn't be able to give you names at this stage. It's not my area of expertise. But if I were you, I would definitely go on Clubhouse and search impact investing. I've met at least a couple of people on there who are in the impact investing space. So that would be the place to go. But you need to be aware of the fact that even though it's about impact, it's also going to be about money and about that return on investment I spoke about earlier. So it's also going to be about generating returns for that investor. So you need to be able to combine impact, high social impact, with high returns on investment. So it's going to be a matter of being good at both. So research impact investing on Clubhouse, on Twitter, check who is in that space, but there's definitely more and more investors operating in that sector.
And Paulina, when you think about investing in something like social impact or other businesses that are about social good, can you also explain the kind of financials that need to go around that? Because again, a lot of entrepreneurs, they're focused on social impact businesses, social good businesses, may not be as focused on financial performance as they are impact performance. So talk to us a little bit about what are the financials that every VC, every private equity firm, every angel investor expects as a baseline? What are some of the key and fundamental financials that every investor needs to be looking for and that every founder needs to be ready to provide?
Sure. So as an investor, I will definitely want to see your financial projections or financial planning for the next, ideally, 5 years. So if I'm investing at a seed stage, which is true, I know that those projections may not always be super accurate, but at least I know that you've made the efforts to really quantify what you're going to be spending in the next 5 years. What are you going to be spending money on, and how much are you likely, what revenue you're likely to generate as a result of that spending. So that's important. I would like to see your metrics in terms of your traction. So what ideally, if I'm investing in a business, they've already had their first pilot clients. And it's really important for me to be able to see how much money those engagements with those pilot clients, how much money has it generated. So that's important. I think projections, financial projections is the key one there. I will, as part of the so-called due diligence process, I will want to see your financial statements and financial accounts at least for the last 2 years, sometimes more. So that's important. I think that's it. Financial planning. How the so-called use of funds, so how you're going to spend the money raised from an investor, and your past company accounts and financial statements.
That's wonderful. How often should a business owner plan to be in touch with an investing firm or a group of investors before they pitch? Meaning, is there a pre-qualifying period of 4 or 5 conversations, and then they're given permission to actually do a 30-minute pitch? Is it normally about 30 minutes? And then what's the follow-up afterwards? What is the level of follow-up that a business owner should take with the investment group after the pitch?
Sure. So every relationship is like every interaction that, if you imagine every interaction that you have with an investor as a dot, a line connecting those dots is what constitutes a relationship. So a relationship evolves and develops over multiple touch points, over multiple occasions where you've made contact with that investor. So make sure that you stay in touch with an investor. I would say ideally once a month, in the run-up to your funding round. I've known and I've known quite a few companies that send me their investors newsletter, or they send me their kind of monthly, sometimes even quarterly update to tell me what's happening in their business, how they're doing against the goals that they've set for themselves, and to kind of keep me involved and interested in their business. So I would say ideally 6 months, sometimes even a year before you actually need funding, you will want to start developing those relationships with investors. And what kind of follow-up to do? As I mentioned earlier, always ask, what is the next thing that you want to see from me? So what is, because different investors have different processes to do with fundraising and to do with due diligence. So at the end of each meeting, and right now I'm starting to have meetings with founders again, the best question they can ask me is, what would you like to see from me as a next step? And then I'll tell you, I don't know, for example, an update pitch deck, or a letter of intent from one of your future clients, or a marketing plan, or something to do with the development of your product. So ask the investor what it is that they want to see next, and promptly follow up, ideally within the next 24 hours after a meeting or after an interaction, just thanking them for their time, providing whatever it is that they ask for. Even if you don't have it yet, you can tell them that it's in the works, so you're just put together that document. But be in contact promptly, because that will show that you're kind of dedicated to building that relationship, and also that you're reliable. It's very important, on level of a relationship, kind of human to human relationship, for an investor to feel that, you will say what you said you would, and you will do what you said you would, and that you can be relied upon, that it's, a solid, you're a person with integrity and somebody who kind of walks the talk. It's really important for them to be able to see that.
Yeah, thank you so much, Paulina. What wonderful insight and what great guidance. And I do know that you have to hop off for another engagement at the top of the hour. I want to be mindful of that. So I want to first take a moment to thank you. Thank you so much for being with us. I can still
take the last question probably, Linda, because I can see there is a question from Nina Womack. So I think we still have time for one more question, if that's...
Yeah, that's great.
And we can wrap up with that, because I've got 6 minutes, so that's perfect. Okay, so the question is it to our advantage to show a potential investor the important awards and press we've received for our work? I would definitely include it, for example, in your pitch deck, or I think it's important. For me personally, it's not as important as, for example, letters of interest from your potential clients, or as revenue that has come in as a result of engaging with your clients, or your kind of growth in revenue over the last 12 months. That is the key metric for me to get convinced that you're really doing the right thing. But at the same time, of course, if you've been acknowledged by an industry body or you received an award, it would be good to know about it. So create room somewhere in your business plan or your pitch deck to put those awards and to kind of list the acknowledgements that you've received, because they will kind of add to the gravitas, to the reputation of your business, and it's helpful. So yes.
Okay. Well, thank you so much, Paulina. I really appreciate you
giving
us, all of the time that you have. Thank you so much. And for those of you that joined us a bit late, Paulina Tenner is an entrepreneur. She's a seed investor, an angel investor, startup mentor, an author, a TEDx speaker, and the founder of Grant Tree, which is a firm designed to help tech startups navigate the really complex world of government funding. Today, we talked about how to attract investors' interest as a female founder. And again, Paulina, we're so grateful for you spending the last hour with us, answering questions and really giving us an insider perspective about how business owners and entrepreneurs all around the world can prepare to find and attract funding to their business. For those of you that are not yet a member of LeadHERship Global, I am thrilled to welcome you to the program today, and I'm really happy to be able to host this impactful conversation. If you're interested in learning more about LeadHERship Global, it would be my pleasure and my privilege to meet each of you individually and tell you more about our impactful community of extraordinary women around the world. Again, Paulina, I am so grateful for your time, for sharing your expertise with us so generously, and I look forward to our next conversation. Thank you, everyone.